Hey everybody, what's happening? Jamie Setley here, SB Trade Desk Midweek Strategy Webinar, and it is 1/9. It is the second webinar, isn't it? I did one last Thursday, so this is not the first webinar of 2019, it's the second. And fun action here early in the year, as oftentimes you do get pretty good volatility in January. A little different in the sense that, following the wild ride, at least in equities and whatnot, in December, which is usually, towards the end of the year, tends to be a little quieter. Not the case this year, of course. All right, let's dive right into FX. First of all, can you guys hear me? Can you see the screen? Yes. Yeah, okay, great. All right. So finally getting a dollar index breakdown. After all this, we are back to where we were trading in May. So finally getting a breakdown. I'm still looking down towards this level, roughly 93.80, 93.90, maybe even over the next couple of days. And we are, catching this through the euro move on the upside. So, looking lower. All right. Now, if we really zoom in here, you can see that each drop we've gotten back to December 20th actually has stalled out in terms of dollar weakness on or very close to the median line. But you can see this is actually, so this is one way in which you can look at levels within a pitchfork or, the median line itself, and it'll show you, kind of give you some of the market's character, right? You can see how the first move didn't quite get to it. The second move, we went more or less right to it. And this move, we actually spiked a little bit further below it. So you're seeing a little more bearish behavior, kind of like thrust action on the downside, right? You're getting stronger momentum on the downside is basically what this is telling you, because you're going further below. So I am looking for this to break, right? You can always consolidate around here. That's, certainly a possibility, but bottom line is dollars breaking down, and we should be on the lookout for more weakness. That's kind of all there is to it, right? So if I were to do kind of a double top measuring thingy here, get you 93.66, right? So 93.66 to say 93.90 is going to be a target zone. And it could be, early next week, it looks like, is when all this intersects. And that's going to be a really big test, because this down here, right, this is the trend line from February of last year. So almost an entire year ago. And that's going to go from, you can see February and April lows, okay? So that's where our focus is, okay, right down here. If you do trade sideways for, a day or whatever, then fine, and we would look to, that would actually give us an opportunity potentially to actually, short more euro, or sorry, short more euro, short more dollar, buy more euro. So good start here so far for dollar weakness in 2019. All right, moving on to the specific setups that are happening. Here's euro. So we got a pretty good entry yesterday. I had thrown the entry up at 14.40 because I did not want to miss it, put it that way, right? I did not want to missed it by putting an entry at like 14.30. We had the median line right down here, and I didn't want to miss it. So we put it a little bit above, kind of a moot point here, but you can see that focus for the first target, right, is 1550-ish. And that's also, by the way, this high from October of 2018, October 22nd, excuse me, not October, but October 22nd. So you do have a high up there. if we go straight through this, then you've got a massive breakout. Okay, and at that point, you'd be looking at this line that comes. This is the same line basically from that we just looked at in DXY. Can you guys hear me? Someone just said sound with an exclamation. That was Marco. Said sound exclamation point. Okay, now okay. So yeah, if we do break through this, that's the slingshot setup, right? Slingshot setup. You break out through through the corrective channel level, and then you just continue on to essentially the extension level of the channel, which in this case would be way up here, pretty close really to the highs from September up in the 118, 118.50 area. Okay. And that would also be, again, the trend line from February and March. It's a little different DXY. DXY was February and April. So, yep, we are in a good spot here. Let's talk a little bit about strategy when it comes to. Okay, so let's say that we do end up. First of all, let's just say we hit the target, right? Let's say we hit 1550, which is the first target, and then let's say that we kind of sideways for a couple days or a day or whatever. If we do, then we should get support at this point. It's all a progression. We should get support, in my opinion, probably in the 1460, no, it's 90, 1487 to 115 area. Okay, so this area right here, right? That's if we pull back. That's the level that I would want to see hold in order to kind of like keep things rolling downhill for the dollar and uphill for euro. You know, and you can just see what we're doing here is pretty simple. I mean, you've got a channel from November to December lows. That channel extended off the top, okay? And then you have parallels within the channel, right? We highlighted the median line, which is where we got more or less got in yesterday right here. But within that, you've got your 75 line, which has been resistance, really nice over here, kind of spiked and screwed around over here for a bit, same thing over here, right? And then at times you've had the 25 as support. So point being is that the market's adhering to the levels within this. Ty says, will you do another buy there? Yeah, probably. You know, I can't say at this moment, but probably. Yeah, Ty. So I'd be looking for the market to hold that level. Preferably, you'd like to see us tag 1550 first, right? And take out the first target. That way we, you know, are left with half the position that we have. We have a position size of 2. So we get out of half, you know, book whatever 110 pips. Then pull back and then buy it back, right? Buy back the piece that you sold, right? In that 1490 to 115 area. So that's the ideal scenario. Okay. Let me just see if we have any high volume levels here on these recent moves. We do not. Okay, so we do not, but no worries. Here we are. So yeah, that's, you know, where focus here is for the next day, couple days, early next week. So to summarize on euro, you're basically, all you're looking for is 1550 target, support down at, you know, 1490 to 115. And if we eventually break out through this channel and we get the slingshot set up, we'd be looking a lot higher. Frankly, we'd be looking up towards 118.50. Okay. I do also want to show or share hold on. I wanted to share a possibility for Okay, here we go. I wanted to share a possibility for another fork that we're looking at, or that I'm looking at. So this one over here, ding, ding, ding. Okay, so this could be something interesting too, which we could be in for like the entire year, frankly. So hold on. All right, let me just copy that and put this window up, and then you can see what I'm talking about. All right. Okay, so this is a fork that is drawn, you can see, from the August low, okay? You've got the high over here in September, and then it's a little weird because it's not drawn off of this low, it's drawn off of this low, but you can see that the 25 line's been resistance. We actually just hit it, right? Now, I am looking for that to get taken out. I mean, I hope it does. That kind of suck. Get a great entry and then you don't get a target. But my point being on this is you could end up having the market trade within this fork for a prolonged period of time, even the whole year. Okay. And think about the progressions that you get within, a channel or whatever. Think about it. I don't have my drawing tool over here, but this is not TradingView. This is different software. But let's say, you come up, and then you maybe pull back some, right? I'm not gonna, you're gonna have to use your imagination because this isn't gonna work. All right, let's say we break out, okay, come back, and then this line here, which you can see was resistance, ends up becoming support. Then you zoom up towards the median line, right? And then you pull back from there, you find support somewhere else, and you zoom back up through it and probably go to the 75 line. All I'm saying, this is just kind of, think of it like a meditation for trading or something. Like if you're an athlete, you used to like, kind of watch your race before it happened, right? Or watch your game before it happened and imagine the things that could happen to prepare you for it, right? So this is the same idea. That's what I'm kind of thinking. And I really like this scenario because, slope is the same here. Slope is the same on all of these highs that are crossing. And it does say, kind of shows or accentuates the fact that we are at an important level. Okay. All right. So that's probably enough euro for the time being. Guess we'd go to cable. Pound, again, not my favorite thing here, right? I mean, focusing on the channel here from the high, this is the chart from last night. I just hate trading cable right now. I mean, I used to love it, but it's just at the whims of like stupid Brexit stuff and what's going to happen, and no one knows. And then it gets thin, and probably shouldn't be scared to trade it anymore, considering that this first day of the year trading kind of partook in the flash crash, and it did bottom right on the channel. I mean, it's perfect. So all I'm saying is, like, for me to take a trade in cable at this time, it's really got to be like spot on, just ideal, perfect, right? So, frankly, it's not much change from what I wrote yesterday. Like, if we pull back a little bit, from here, Ty has a great comment. One of the greatest betrayals in the history of progress, treasonous politician. No kidding. I mean, it's a joke, man. Like, I don't. They voted for something, and then the powers that be are just like, well, you voted for it, but sorry, So, from that's not, neither here nor there for us, right? I mean, we are here to trade it, and you do have to kind of be positive on this, from the standpoint that, again, the channel's perfect, nailed the low on this, on the flash crash thing, which again, pound was part of that, right? Everyone talks about the Aussie and the yen being the flash crash. That was the real one, but excuse me, but pound did have a big spike down from 126 to almost 124. So, there was it was there. It wasn't like the 2016 flash crash by any means, but there was something there. But yeah, you can see us, trading around this median line. Again, it's not super clear, right? The euros is so much clearer to me right now than pound, but there's something here. If we can get moving on the upside, then you'd be targeting essentially 129.20. You can see the low over here, high over here. This is the 25 line from this channel. So, there's levels to pay attention to. There's better setups, I think, out there. Trading this right here, right now, to me would feel like, just kind of pressing it a little bit, forcing a trade. So I'd rather not do it. I'd rather concentrate on where things make some more sense, at least to me, and that would be in a place like the euro, at least when it comes to dollar weakness. All right. Okay, let's take a look. I want to, before we go to like Aussie and Kiwi and CAD and all the commodity stuff, which is certainly moving today, I want to take a quick look here at some other European stuff. So I want to look at dollar Swedish krona. Dollar SEK, as we've talked about a lot, it does tend to lead on the downside. And I actually want to pull up too. So some of you may know I'm doing a presentation on Saturday. Okay. It's an MT4 Trader Fest thing, and we've sent out emails about it. Whatever. There's, it's on Saturday. I'm doing like 45 minutes, but there's a bunch of other. There's like 7 speakers that are doing this. Anyway, one of the things I wanted to talk about in it was dollar SEK. So this is the dollar SEK chart, one of them that I want to show. And this is the comparison of dollar SEK on the top, right, and DXY on the bottom, okay? And you can see here, we're kind of noting the various divergence, occurrences that have taken place over the last, 4 years or so, 3 to 4 years, and basically starting with the 2015 top. You had the obvious one. You kind of have slight ones here, right, into the 2015 low, another one at 2015 high. Obviously, the 2-week lag that we've talked about before, dollar SEK topping out 2 weeks before DXY. Same thing over here, right, divergence on the lows. And we've had, since August, we've had a drastic prolonged divergence, right? So, dollar SEK topped on 815. Remember, that was the first euro low too, okay, of course. And of course, the first DXY high. We all thought that we kind of had done the dirty deed then, and we were about to go the other way. We did for a little bit, came back, and there was more testing, right? So here you have that 4-month, basically, non-confirmation. So I thought that would be interesting to share with you guys before I share it with the other folks. No great secrets here. Those in the know, follow this quite, closely as far as the Swedish krona and its movements. And I've heard various explanations as to why, this is the case. Like, why does the Swedish krona or the Swedish economy, for that matter, sometimes lead that of general Europe? And there was a really great explanation I saw on Twitter maybe like a week or two ago, and I wish I would have saved it because it made a lot of sense to me. But something about Sweden being kind of like an import-based economy or something, and there's an import-based wealthy economy or something like that. I don't know. Ty goes, do you use MT4? I do not use MT4. MT4 is just kind of like, they're one of the sponsors of this. So that's, and I'm speaking to it. Like, I'll be using my own charts, right? Like, I'll be using TradingView and TradeStation. So I do not use MT4. I think also one of the people or a couple of the people that are doing presentations are talking about using MT4 specifically and like using different robots to trade. Again, that's not really my thing. So I have, some algorithm type stuff that I use, right? But I use it more in the context of decision making, not so much like turn on this robot and let it trade for you or whatever. So, anywho, Ty goes, I got something to show you. Sure, man, absolutely. We'll chat on Twitter about it in a little bit. Chat on the private feed if you want. So anyway, let's move to present day, and we are looking at Swedish krona now. Okay, so dollar Swedish krona right on the 200-day average, right? I would pay attention to this as well as you get down towards the range lows here, okay? Range lows being the low from September 24th, because what's going to happen is I can envision a scenario in which we get a kind of a run on this 924 low in dollar sec. At the same time, euro is going to be pretty far below its September, probably, right? Maybe not, but like, you know, this is a lot closer to the September low than euro is the September high. So that's all I'm getting at, is just kind of be aware of that. So just kind of a level to pay attention to here, right? Still love the euro long, obviously, at this point, but something that we will keep an eye on as we move forward. Okay, let's move on into commodity currencies, yen, and all that jazz. All right, so Aussie, we are short. Got triggered at 71.74. You can see this is a 4-hour bar right here. So got up to 71.94 this morning. Wait, stopped 74.14. That's not changed at this point, okay? You know, where from here? I mean, so there's a couple things to look at. Like, I think I'm of the mind that the Australian dollar has made a really big low down here. Like, and I mean, when I mean big low, I mean, it's possible that we just made a low for like, you know, most of the year, if not the year. I mean, you get a flash crash like that in the first trading day of the year, second trading of the year, I guess, technically, but after dropping from 2011, like, that's probably not, you know, the middle of the trend is all I'm getting at. So it's probably not, it's not, definitely not the beginning of the trend. So it's not the middle, it's not the beginning, it's probably the end. And levels to pay attention to near term for our trades, though, right? That's a different story altogether. This is the trend line from February. So frankly, I would be looking at that too. Like, if we were to drop back here to 71 and change, that might be an area where we actually pay attention to it. I do feel like you probably are going to have a bigger pullback than that. I mean, let's just assume that we're right and say that we have topped for some bit up here, right? I mean, it's a really good spot. You know, even a 38.2 would bring you back to 70.30, and that's going to be on these lows. So, like, we might be able to hold on for 70.30. Is that crazy? You know, I'm not sure. We'll take it as it comes, right? I'm not going to predict where we're headed right now. All I know is that we have hit a pretty darn important spot. I mean, the 72 region is legit, right? So what did I do there? Whatever. All right, so yeah, 72 is legit. You can see here the low at 72 or 71.99, right? High over here at 72.04. Stops just above there. Hopefully it's enough. And you know, obviously the 4-hour chart here, 200 average on it. So I am looking for us to come off a little bit. You know, if we can maybe roll off and get back down to the 71, maybe I'd say probably under like 71.50. I'd probably actually think about maybe just tightening the stop, maybe even go and break even. I would hate to, I don't know. I like the trade here. Aussie's into a big level. I just don't, you know, we are in a dollar downtrend. I mean, you know, what else do you want? We're in a dollar downtrend, but again, that's DXY, that's mostly euro. So that's not like my favorite trade right now, but this is a spot where I'd be looking to, for it to come off some. So we'll see. If I go to a longer term chart, and I think I have an Aussie chart in here. This is actually the Aussie 10-year yield minus the US 10-year yield. So it's the yield spread. And you can see that we've actually channeled on it and we're sitting at support. So longer term, certainly Aussie turning the corner, in my opinion. This is Aussie in blue compared with that 10-year yield spread. This is a really long-term chart of the Australian dollar. This is a weekly chart. You can see right here. I'll leave this here for a second because I know Ty probably wants to take a picture of it, and you should, because I think it's a good chart. But yeah, pretty big spot, huh? Pretty big spot. So if we're looking at it from this standpoint, that magenta line up there is like 76. So getting back to that region, certainly a possibility, right? And that would just be probably something about like a 76.20 would be a 618 of the drop from 2018, right? So thinking we have like a first wave up, pull back in a little second, or just some consolidation, and then we just get going on the upside again. Kiwi, this one kind of annoys me a little bit because we nailed that support and we had it marked. Of course, it happens the first day of the year. And yeah, I mean, it's a beauty. So Kiwi's turned up. At this point, we'll be kind of looking at any sort of pause in this chart, or I will be looking at any sort of pause in this, any sort of pullback to offer a buying opportunity in the New Zealand dollar. So, it's I don't know if it's a pipe dream to get a test of this support from above. That might not be in the cards. We just might have to look at something like 67.60. It's a good horizontal level. We had mentioned 67, I think 2 posts ago, support. We got 67.07 yesterday. So the market is respecting levels pretty well. It could even be just a shallow pullback to 67.70, frankly. So, you're getting good action here on Kiwi. 618 of this is going to be 68.25. So we're getting pretty close to that too. So I paid attention to 68.25 for a pause. Marco said that's for short Aussie, considering dollar weakness. What about shorting Aussie Swiss? Yeah, so I'm not a big cross guy or non-dollar cross guy. I like to kind of like play them individually. Marco, as you know, but in the Swiss franc, I mean, that thing, I don't even look at that anymore. I probably should, right? So Swiss franc, even the euro is even stronger than the Swiss is. So Swiss is down, dollar Swiss down 40.4, percent. Euro's up. So look at Euro Aussie, right? Let's look at Euro Aussie. That would actually be a place. We could look at Euro Aussie. Hold on. Well, essentially, we are long Euro Aussie right now, right? So we're long Euro and we're short Aussie. Sometimes it just works out that way. All right. Here's a weekly chart for you. And huge reversal last week, right? That's that Aussie flash crash, as we know. So weekly, daily, putting in a little bit of a bar there, right? Like I probably wouldn't be buying this, but that doesn't mean it's not a decent trade. In fact, you're on a parallel. So now if we go, let's go even shorter term. Let's say that this is the beginning of a bigger pullback from this really long-term median line, right? You'd probably expect to see some, you know, a lower high, just like I'm expecting at some point to get a higher low in the Australian dollar. So that level right there, I'd pay attention to the 6190 figure. It's a 38.2. It's that low right there. So you get up into there, maybe you've got something on the other side. Again, I'm like I like the Australian dollar here, right? But I think on a 1 to 3 day basis, it's a sell up here, right? That's all. That's what I'm getting at. I'm not not an Aussie bear, so to speak, right? I think that the Aussie's a buy, but I just can't. Right here's the trade. I'm just trying to make a buck, right? I'm like, right here's the trade. Like that's all there is to it, So you can sit here all day and wait for it to pull back or not pull back or whatever, or just take a shot and sell it at resistance and see if you can, scrap out a little, short-term trade on the downside and then look to flip it. So, I guess we could actually see that in that Euro Aussie chart too, right? Like you've got this really long-term beautiful channel and we hit kind of what we would call uptrend resistance on it. I mean, it's a really nice looking channel, nice median line. So yeah, good chart there. I would follow that if you were, bent on trading Euro Aussie or something. Okay, moving on. Let's go to dollar CAD. So much for looking for a spike. So you see how quickly this is reversed. This is the entire channel from 2017. So over here, and there you go. And it's only 1, 2, 3, 4, 5, 6 straight down days. And from 136.70 or so down to 131.70, so 500 pips, which I guess in CAD is about $350 pips, right? CAD, 70 cents to the dollar. So it's a lot like the Australian dollar. Where what are you going to do? The break, you'd like to sell the break or a retest, you never get it. We're into areas now where you have a lot of kind of congestion, right? A lot of ink down here. Center line for this entire channel is right here. So that's going to be 131.70. Your low right now is 31.80. Ty goes, you nailed that up there. I couldn't believe I didn't take it. Ty, I can't believe I didn't take it either. I was thinking about that myself this morning. I was like, wow, what great resistance you had on dollar CAD, and you never took the damn trade, you idiot. But whatever. You move on. And there'll be opportunities here, right? I mean, at some point, you would think that you get an up day or some consolidation, and then we'll look at that consolidation to see, to see what it looks like and if it presents an opportunity to go the other way. Like at this point, looking at this chart, like I said, it's a lot like Aussie. You've got to be looking at this chart and thinking that you bounce from here. It's a big support. Like I said, you've gone down 6 straight days, so into a big level. And yeah, I'd be looking for a bounce here, right? That bounce should probably be sold. Can we get all the way back up to 33.70, 33.90? I don't know, right? If we did, that'd be the spot to do it, right? Was hoping that we'd get something like a spike to fade on BOC today. Just wasn't in the cards for us. Wasn't going to happen. All right. Dollar yen. This old bastard right here. All right, so dollar yen. We're looking here at, and this is just an hourly chart, and we're looking at just the line back from the 1214 high. So, more or less kind of on it or rolling over from it, I should say. Do have kind of resistance up at the weekly open 108.54 area. So continue to kind of look at this and trade within this channel. You can see the median line, right? 108-ish. Obviously, it declines each time. The first area to look for a higher low in dollar yen probably wouldn't even be until 107.60, which would be 38.2. Okay, and eventually probably looking at a bigger retracement, in my opinion, down to the 106.70 area over here. So that is, if I were to set up a trade on the short side here, I'd be looking at, we'll see how the day unfolds, right? You got to remember, we came from such a depressed place in risk assets from the 1224 low in the equity markets, and then from the flash crash here on January 2nd, that shorting is going to be really tough, shorting risk, as we've already seen, right? So, you really got to let it play out. You really got to let it come to you. And in this case, get back up to that 108.60, 50, 65 area up here, right? Week open, square root level. Then we could try to look and target a short with stops above the highs at 109.15 and look down towards the 106.70 area. Obviously, it would be a solid reward to risk opportunity right there. If I look out at a little bigger picture chart, this is an interesting tidbit right here. So you see this trend line? This crosses 2017 highs, okay? But if you extend it back in time to the left, it also crosses the highs in early or late 2015, excuse me, and then August 2015. So there's a level to pay attention to there. At some point, does it happen after we pull back to 107.60 or whatever, or 106.70, excuse me? That will be an area that's probably of interest. It might be later in the month, right? But that's going to be an area that's probably of interest. And you can see it's in line as you get towards the back end of January. It's going to be in line with like these lows over here at 109.37. Okay. So that's going to be an area to pay attention to in dollar yen. Probably not just yet, right? Okay, so there's the FX stuff for us for the most part. I do want to look at a couple more things because we have something serious happening here in the Chinese renminbi. This is a big deal. Chinese renminbi, guess what? We just broke down through the median line, the channel, the median line, that if you go back to the 2014 low, you make it. And this is an important thing to pay attention to because look just how precise the support has been throughout the last kind of trimester of 2018, right? Including over here on the 4th. Well, we just broke that today. So this is important. We're probably headed lower towards 670. And if you were to get some resistance, or if you were to get a bounce, you would be looking at resistance up at about 685. Okay. This is ultimately very positive for the Chinese equity markets, most likely, and probably risk in general. Although when I look at, say, an S&P chart right now, it's kind of hard for me to want to jump right in and start buying stocks after they are rallied this far off of their lows, right? So if I look at, let's just go to a NASDAQ futures chart. Okay, let's go to a 60-minute chart. Okay. 60-minute NASDAQ futures. See the channel, follow the channel. It's stair-stepping higher, stair-stepping higher. Maybe you get one more spike up into the 6680s or something. I don't know. It's been really hard to try to short this. It kind of touched on that earlier. At some point, you're going to get a pullback and maybe look for a higher low down on this lower parallel or something near 6,400. I'm not sure. You know, at this point, we are getting into the entire center line of the structure that goes all the way back to the the March 2018 high. So you can see we're almost all the way back to that halfway point, right? Come a long way in a short amount of time. You know, Christmas Eve was not that long ago, and here we are, you know, 58.20, now we're 6,600. So I still think that the best course of action, I talked about in the Sunday update, that I'd be looking for kind of a test of lows in stocks, and then, you know, maybe currencies wouldn't do it, and we would have some non-confirmation and risk, and then you'd be looking for the market to go the other way, as in get a bigger rally. You know, we've had such a move higher at this point that it's getting kind of tough to see us come back and test the lows, right? That said, like, you do need to put a little more ink, in my opinion, you know, sideways before you can get a real sustainable rally. Otherwise, this is just a short covering rally, right? And a fast one at that. But more information is needed before I can make a really good decision on wanting to do anything, if anything, at all at this point. So kind of on hold there, awaiting clarity or something. I mean, we've equity indices now, S&P futures, you can see have gone back to the Powell high on 1219. So it's done a complete reversal, gone all the way back to where we started, and just act like, I guess, all of this never happened. So yeah, that's about it for me on that. I would say that if we're looking at, this is that's S&P futures. This is SPY, also at a center line. But if we're looking at S&P futures, you can draw a fork from the top, right? This is the October 3rd high, and go down to the low on October 28th, high on 12.3. Low was on the lower parallel. Upper parallel is a little higher. Maybe that needs to happen. I don't know. You know, that's going to be all the way up at like the 2620s. So you're talking another 40 points in the S&P. I mean, well, it's 618. There you go. 2627, 618. So maybe that's when the bears cry uncle, and you get something on the downside to satisfy them, potentially. Okay, so there's that. Other stuff that we want to maybe look at. Crude oil is on a tear right now. And it's always the long-term charts that pay, isn't it? So look at how that worked out. So if we go to a monthly chart, crude's up 13% this month, okay? Short-term chart, or shorter-term chart, I should say, you're breaking out through the slingshot type thing, right? So support 51.30 maybe at this point. We're looking towards 58. I'm looking towards 58. That's the high from November 16th. It's also, you see this magenta line, that's a really long-term slope line. That's the channel from 1986, okay? Other markets that might be of interest over here, bonds. I did note this. So bonds have actually, oh, there goes euro on a little rally. Is it going to hit our target? Hasn't done it yet. Bonds are into a level. So you just draw your channel here, okay? Support, here we are. So not a coincidence that we've tried to hold up here. Again, this doesn't mean anything. All it means is that you're at a level. It doesn't mean that you're going to go like this. It just means that you're here and you've dropped to here. But prior instances of going to here have indeed hit these levels, all right? So it's a wait and see thing in terms of the risk on, risk off situation. You know, it is interesting to see dollar yen kind of acting like shitty up here. Christopher Whitney, any thoughts about HYG? Yes, actually. So funny that you said that. I run these scans every day and week on equities. And they are like, so you can see I run them. So you have like these are for stocks, ETFs, whatever. Okay. Like for example, the first one, this is actually filtered by volatility, but the first one that comes up is this company called Sage Therapeutics, which funny enough showed up on the bullish weekly scan. You can see here's the second one on the bullish weekly scan on Friday's scan, and now it's on the bearish daily scan. So there you go. It gapped up 40%, went to 159, and now it's on the bearish scan, and since then it's been getting murdered. It's down 9% today. But HYG is on there as well. HYG is actually on the bearish scan. You can see filter for volatility. It's going to be the least volatile, right? 0.82. You're comparing this to a bunch of stocks. But it's on there as well as junk, JNK. So HYG, here you go. So what do these red dots and blue dots mean, you ask? So these red dots mean that you have basically met the conditions necessary to consider a market extended on the upside, and you're close enough to the 200-day average that you have like risk parameters, you know, in place. So like, you know, here, 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 and then a bunch of them throughout 2018, right? There's that. So yes, HYG, I've got us at a pretty big, important level. You could say that we are entering an important level, I guess, but if we look at this chart-wise, just horizontal levels that, you know, are interesting, that could do something, 8407 to 8460, right? So we're pretty much there as far as the bottom of it. That we are at high this 8401 today. So yeah, this would be an area where I'd look, Christopher, for resistance in HYG. By the way, here's the NASDAQ futures on an hourly chart. Here's that channel. So okay. You can see that this morning's drop. Look where we stopped. Median line. Okay. So pay attention up here, 75 line. That's going to be right up there. If you get there, if you drop below the median line, that's your first indication. Actually, that is the indication that you would have some sort of a pullback underway towards, you know, probably 64.60 initially, right? 64.67 is that low from yesterday, and eventually be looking to work this back down towards the lower channel line. So, you know, like all the grand proclamations and charts and things that I put out notwithstanding, this is kind of where the money's made, right? Is honing in on the near-term behavior changes, especially markets like this, not trying to fight it too much, admitting when you're wrong, letting it go to the next level, trying again, and yada, yada, yada. You get the idea. All right. Okay, so I am going to wrap it up there. Sitting pretty in euro for the moment. Not so much in Aussie. It's actually flat on it. We're short at 71.74, but I am looking for it to roll off a little bit from here, just like I'm looking for dollar CAD to get a bounce from 31.70, but we'll see about that. Frankly, the next trade I would probably be willing to do, it's going to be dollar yen on the downside. That's going to be 108.50, 108.66 up here. So we'll see about that. But, still feeling this out. Like, you have these markets that we come in the year and everyone's freaking out, get a big reversal. Now we're back and people are getting bullish again. And, you see how this stuff works, right? Market's going to find a way to screw as many people as possible. I frankly still think that we're near some sort of a short-term top, like in for a good, strong 3 to 4 day drop in the markets and generally in risk. I mean, this is the Aussie yen chart. Look where we've come right back to resistance, right? Right back to it. This is one Sunday we talked about getting resistance between 78 and 78.30. We hit 78.12 today and we come off a little bit. So you have this raging bull market in U.S. equities right now, just after the raging bear market, right? But we've got other risk barometer things starting to get interesting, like Aussie yen's back into resistance. You've got bonds or testing support. Doesn't mean it's going to hold, but we are testing a support level. Yeah. So, all right. Leave it there. Great start to the year so far. Great volatile markets to trade. Good setup so far. And hopefully we just keep that going for 12 months straight and make a bunch of money together. All right. Again, guys, if you have yet to sign up, then check it out. There is, let's see if I can find it. There is a talking about the thing on Friday, or sorry, on Saturday. It's a webinar I'm doing on Saturday morning actually. So, but if you want to sign up for it, check it out. Go to this thing. Where's that website? I'm tweeting it out like sometimes throughout the day. Here it is. All right, so this is it. This is the website. So go to mt4traderfest.com, right? These are all the people speaking. Some people are doing very different things. Some people are doing system stuff, algorithmic stuff, system design, blah, 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 blah. I'm doing just kind of a presentation on some really big themes technically that I think are interesting to follow or look at. So that's what I'm doing Saturday. So yeah, check it out. All right, everyone, have an awesome, awesome, awesome rest of your week. I hope 2019 is treating you well, okay, for now, and hope it continues to do so if it is. And I'll get this archived for you as soon as I can. All right, take care, guys. Bye.